Our next question is from Tristan Gerra with Baird. Please proceed.
Hi, good afternoon. Just following up on the new design wins relative to the alpha sampling. How much of those wins are contingent on basically your company meeting the thresholds that are expected by customers? And you've also said during the Q&A that of the original 4 design wins, some were signed, others were just engagements. So how much of that is really a hard win that is going to launch as long as you deliver the product versus others that might be engagements with a potential or a strong potential to turn into a design win? And then finally, are you able to quantify, kind of the design win revenue funnel is at this point over the next several years?
Thanks, Tristan. So to be clear, that these customers that we're talking about, in the total of 6 out of the 10, and of course there are more than not included in the 10. We are now at the stage with these customers where they're very, very explicit in terms of what they want, that we have agreements in place, and our engineering teams are working together on the activities associated with the specific design-in of our solutions into their wearable products. So all of those will just continue. I think universally that we've seen all customers very, very, very keen to have one or a number or all of the biomarkers that we're able to deliver with the platform in their products as soon as possible, and they're driving us very hard. Of course, in terms of number of customers, in the consumer area, we don't want to be kind of overwhelmed with a long tail. So of course we're focused on the very, very largest customers and those customers that we believe will take us to significantly higher volume. So that's our approach.
Great, thanks for the color. And then we have a sense of the ASPs, for the module and for the chip. Do those ASPs change depending on the markers that they're going to initially use, or that doesn't matter and the ASP is solely based on the hardware platform that you're delivering?
I'll turn that one over to Mahesh, but just remembering that there are 2 versions, what we now call the baseline and the pro, that they were formerly called the basic and the advanced. So they do themselves have different prices and different levels of biomarkers. But over to Mahesh.
To address your specific question, this was what was initially forecasted and planned by us, and that same the assumption still holds good. So there is no change to that. It kind of reinforces our assumption.
Great, thanks a lot.
Our next question is from Paul Silverstein with Cowen and Company. Please proceed.
Thanks. I've got a number of clarifications of responses to previous questions. First off, Andrew, I just want to make sure I understand this. The 6 out of 10 consumer customers you're referencing, including the 5 new wins, were any of those 5 new wins with customers that did not have quote unquote engagements with you previously, or is this just going to the next stage with 5 of those existing engagements?
Paul, yes. I was just thinking, I think we were engaged with all of them, but moving them basically from engagements to contract.
All right, that begs the next question. The difference, when you say that they're going from engagements to contracts, correct me if I'm wrong, but I assume none of these are contractual commitments in the sense that they've given you committed to volumes that they have to carry through with, or they have to pay if they don't take it. I assume none of them are at that stage yet.
They're not at that stage, but there is financial commitment in a number of those relationships, and they're quite explicit in terms of their process of going to market. And so that involves a certain level of volume required for the qualification process in their products next year, which then leads into the following year's volume. And obviously what we've been guided by is those individual companies' existing position and share of the market in terms of anticipation, and reinforced by what they're saying in terms of what they expect the volumes that they will be demanding in 2023 will be.
All right, I just want to make sure I understand what you just said. So they're giving you indications in terms of what their volume expectations are. But when you talk about commitments, the commitments are to volumes for their own internal qualifications? Is that the extent of the commitments to date?
The commitments, there is money involved in a number of those contracts, but the level of commitment is not at the level of all of the units that they will require for their full qualification. So those POs will come in due course.
Okay. Then with respect to MedTech, the 2 companies you referenced, does that make for 3 total, including your initial one, or is the initial one your investor one of the 2 that you're referencing?
We can't name customers specifically, but in terms of 2 that we're engaged with, we have moved from the engagement level with 2 of the top 10 to a contractual level. And those relationships are moving very rapidly and in an extremely exciting position. Outside the top 10, we already had one other customer signed previously, And then the really interesting development, which is reflected by many companies that we're engaged with, as well as the ones that we're now contracted with, is the desire for Rockley to deliver the complete solution, because we had to create the complete solution, a wearable, as well as the full stack, in order to conduct all of our human trials and in order to provide the reference designs and the algorithms for the consumer market. So moving into the healthcare market, those devices, they're not, they don't tell you the time, you can't phone anybody on them, they don't give you your email, but they are exactly what we've discovered the healthcare market wants, the professional healthcare market. They want essentially an innocuous device that sits in the background, typically not on your typical watch wrist, but they're actually better on your dominant wrist, and don't need to be charged every day. They can charged every week, and sitting there providing the data continuously into the cloud platform and providing essentially the APIs for our customers to then extract and utilize and benefit from that data. And that is the model that has now evolved for us over the last couple of months, which is another huge growth opportunity. Obviously, we're talking about devices that have a much higher average selling price because we're producing the entire device, that they become stickier over time with FDA qualification, though that's not required for initial healthcare customer applications, and they provide a more solid platform for us to monetize all of our cloud-based capability. So that's progressed a great deal for us.
All right, Andrew, if I could ask you, I know you went through it earlier, but if I could ask you to revisit commercialization, what is required between now in getting to commercial revenue? And I'll apologize again, perhaps I have a misunderstanding, but Quinn suggested that commercial volumes won't be until 23. I was under the impression that y'all were talking about commercial revenue by the end of 22 was what I thought you initially put out there. Not that the end of 22 and 23 is all that different, so I don't mean to make a big deal out of this, but I would like to understand if anything's changed.
Nothing's changed, Paul. So the pre-alphas that are being used today for all of the algorithm development, all the human trials, and we are shipping product to customer today out of that generation. That is then replaced by what we call the alpha versions in the first half of next year. That is all on track. When we last spoke, they had taped out. Now those first batches of the spectrophotometer chip are fabbed out, and all of that work is going very well. That generation will be used in a level of volume. Typically, customers require about 10,000 units for their qualification process through the course of next year. Then the beta versions, which are going in the end, customer launch products in 2023, ramp in Q4. And there's no change to the guidance that we provided there or the guidance in 2023.
So you'll be selling those products to your customers around the fourth quarter of 22. If all goes according to plan, you'll be booking the revenue, initial volume revenue, commercial volume revenue in the fourth quarter with a ramp throughout 23 as those products sell.
Yeah. And so if you look at what's happened, we've gone from a couple of customers and the ones that we were engaged with, and using 4 consumer customers to drive our entire revenue projections over the entire period of the model that we put out there, to a position now where we have gone to 6 out of the 10 top customers in consumer. Then if you look at the healthcare area, what we've done there is we have been able to cement the opportunity to deliver the entire full stack solution in that area, and we've got demonstrable customer traction in that area. Now, how that rolls out and affects things, that is not waiting for anything else. That is actually on the timeline of the chips and modules for the consumer market. And so we've not projected any numbers associated with that, but what we're saying is that has now become a very strong opportunity for us, where the ASP is obviously much, much higher, and there is no physical socket design in that we're waiting for the 2023 launch of our end customers' products. That those customers in the healthcare area are driving us as fast as possible to start their utilization of the technology on an earlier time frame, which is very, very exciting.
So Andrew, you think you could have commercial volume revenue from MedTech in 23?
We will, within the numbers that we projected for 2022, there is the opportunity to have MedTech sales there. That's really the key message, that we've really cemented that opportunity with customer traction, with customer contract engagement to start shipping into that market in 2022. When we were previously only projected that in 2020, anything meaningful in 2025.
Understood, but Andrew, I apologize, I'm going to push you here. I just want to make sure the difference between commercial volume and pre-commercial volume. You were talking about commercial volume in late 22, 23 for MedTech coterminous with your shipment into consumer wearables?
Exactly.
So you're 2 years ahead of schedule on that. All right, the final question for me. What, if any, meaningful hurdles remain from a technology standpoint? What are those hurdles? And it sounds like from your commentary, I trust the answer is not, but have there been any glitches of a meaningful nature to date?
No. Things have rolled out extremely well in terms of the technology. If we recall, the measurement science was well developed by us previously on a benchtop level. And so what's been critical here is the delivery of that benchtop performance in the miniaturized spectrophotometer chip format. And the performance that we're getting from the pre-alpha devices is meeting that requirement. And as we look at our human trials that are going on with those devices, there is an incredible level of excitement. This is both the baseline and the pro versions. They're incredibly powerful instruments, very powerful instruments. So the insight that we're getting and the things that we're achieving are exceeding our expectations and making us and our partners extremely excited.
So you're not overly concerned about that. I guess I'm trying to decipher if there's some risk that occurs between now and commercial volume shipment. What, if anything, that could be over the next 12 months?
Technological risk is not there. Of course, there's all the usual executional ramp-up associated risks that you would expect that are no different to before. And things like making sure that we've got dual sources, making sure that we've obviously placed purchase orders for our various bill of materials. All of these things happening in the right time frame. That we protect ourselves against any kind of problems that might occur in terms of you take something out, you fab it out, and there's a fault. How will that delay you? We over years we've developed a risk mitigation on those kind of issues because they always do occur. They do occur by having what we call lead lots, main lots, backup lots, etc., where we can make changes. So we've learned a lot in terms of how to make sure these things run to schedule and that we mitigate the inevitable risks. Some design element is overlooked or something like that, and that you need to make a change. But that we have the process of mitigating those risks. And we've also we're going from a beta design, from an alpha design, which is fabbing out now, to a further design, a beta design. But we do believe the alpha design will ship to customers and may well be sufficient. So we put another major design in cycle in the loop there between now and volume production.
Got it. I appreciate the responses. Thank you.
Our next question is from Tim Savageaux with Northland Capital Markets. Please proceed.
Hi, good afternoon, and congrats on all the new customer engagement. And my question was about that, and not to beat a dead horse, but just in terms of looking at, trying to get a better sense of, what progress is incremental here. I think in your previous investor presentation, you talked about, this is going back to September, I guess, 8 contracted customers. I think that was all consumer electronics, and then, on up the funnel, various stages of negotiation. With the 5 additional consumer customers and the 2 new med techs, is that 15 now? I guess would be my question in terms of contracted customers, where there are a few that were maybe, along, or can you provide us with an update for that contracted figure that you'd previously quoted? That's question 1. Question 2 is that previous figure seemed to correlate into what you estimated was a 60% market share in terms of these customers' share of the smartphone and wearable market. I wonder if there's an update on that market share number as a result of these new wins on the consumer side.
Yeah, this is Manish. Let me I think all of you are asking almost the same type of question, so let me clarify certain things. There are 2 things. One is the wearables and the medical device. On the medical device, we have now 4. We have 4 customers on the medical device, and then 11 in the consumer wearable device companies. So 15.
That's 15. It works. Okay. And then maybe follow up on that market share commentary on the consumer side.
So on that front, just to be clear, Tim, you were looking for market share in wearables or smartphones?
Well, you guys had defined it previously, I think, as a combination of both, but you are absolutely welcome to break them down.
Yeah. So breaking it down, what we just announced prior to the quarter announcement was 6 of the top 10 in the wearables, that's smart watches and fitness bands. When we look at the smartphone players, there is an overlap there, and I don't have the numbers in front of me, but I think in terms of engagement, it's probably bigger in terms of the smartphone space, in terms of the percentage of the market, because many of those players are leaders in the smartphone area, and at least one I can think of that isn't in the top 10 in terms of wearables, but is certainly in the top 10 in terms of phones.
Yes. See, there are a few players in China wherein, especially this customer Andrew is referring to, is one of the top 5 producers of cell phone in the world, but they are aggressively now started getting into the wearable space, and that's the one we signed an MOU recently.
Great. Thanks very much.
Thanks, Tim.
We now have a follow-up question from Paul Silverstein with Cowen and Company. Please proceed.
There's always one more. On a serious note, going back to an earlier question, these new quote-unquote engagements, are they exclusive, or all of them exclusive, or none of them exclusive, or some exclusive and some not?
So exclusive in what direction, Paul? I mean,
exclusive to you. Are you aware of them working with any other company on biosensor technology?
Not of the nature of our technology and the power of the technology. As you know, what we are basically delivering is something much more powerful than the LED type of solution that's there today, and that forms the mainstay of I think the industry's kind of roadmap here, to simply to continue to improve on the performance of the LED-based solutions, which would, in our view, would never get anywhere near close to the performance that we're able to deliver here. So as we look at all of those customers, it has been a journey for us really to root out with, and look on every stone and get a relationship with every single customer to figure out whether there was something else there lurking. And we are even more confident today than we were on the last call that there isn't something else there. And as we look at this technology, the performance that's delivered by our solution is extraordinary, and that's coming out in terms of the human trials. But it is also, stuff that requires an extraordinary amount of long-term development and planning, and in a form that we don't see anybody else having, even the beginnings or the platform to be able to implement something like this. And then you've got, huge amount of qualification of material science, of semiconductor processes, of testing procedures, of packaging and assembly. All of these things take many, many years to get perfected and to, get ready for the ramp that we have in front of us. And so, our customers are telling us explicitly that they do not have an alternative to this.
And Andrew, just to be clear, are these customers indicating to you that they plan to totally displace in all their form factors the current state-of-the-art LED technology with your silicon photonics-based solution, or are they going to mix and match for low-end, they'll maintain LED and they'll only use you in certain devices, or again, are they planning to displace or to shift over their entire lineup?
Well, the LED technologies that exist today, which we actually include in our module as well, are good for primarily measuring heart rate variability. Typically devices have accelerometers, motion sensors in them. That's what we do as well. And then the 2 LED solution for pulse oximetry for blood oxygen measurement. Now, those technologies today, that is not in the the infrared range that we're operating. So they still remain good to measure those particular parameters. It's the infrared and very broad infrared spectral range that we add on top of all of that opens up all of these additional biomarkers. So in terms of, the customers essentially are not abandoning the existing LED technology that delivers those particular biomarkers. They're adding the IR biomarkers that our technology advances deliver. And our customers have the opportunity to actually either take the IR element of what we do, which is, the principal value of it, or a complete module with the IR and the existing LEDs for the heart rate and the blood oxygen. Now, one could think about extending the LED technology into other areas, but we don't see that happening. So it sort of stays where it is, but the IR technology builds dramatically on top of it, adding all these additional biomarkers.
All right, I'll take the others offline. Thank you.
And we have another follow-up question from Quinn Bolton with Needham & Company. Please proceed.
Hi, Andrew. Just wanted to ask on a sort of supply chain check. If customers intend to go to volume production or receive volume production devices from you in the fourth quarter, can you walk us through sort of your lead times and when those customers would have to place those production orders, given how tight the supply chain has become? Would they need to place orders in Q1 or Q2, or are your lead times still relatively short that those production orders could be placed as late as Q3 of next year?
Well, we're taking the position in terms of the supply chain and the bill of materials to make sure that we are in a position to meet our volume projections in that period. So customers could place orders on all of the timeframes that you've indicated and still be satisfied.
So you're sort of placing those orders or holding that production capacity at your manufacturing partners in advance of those orders to provide some flexibility on the timing of customer orders.
Exactly.
And is that contractual? Are you effectively obligated to take that production capacity from those foundries?
Yes. Yep. We would be contractually obliged, but in terms of the cost of that, it's not a significant cost to us.
Got it. Understood. Okay. Thank you.
We have reached the end of our question and answer session. I would like to turn the conference back over to Andrew for closing remarks.
Well, thank you very much, everybody. Really appreciate the questions, and we're really excited about the progress of the company. It really exceeded our expectations, and we're looking forward to updating you further in our next quarter earnings conference call.